Hello guys, and welcome to my YouTube channel once again. In today's video I want to show you a simple way you can easily analyze the market, so you can always make some good profit. And as you can see on my screen, this is a setup that played out very nicely. This is on Volatility 50 index. Like if you've been watching my videos, you would notice that this is one of my strategies. This is one of my best strategies. This particular structure we have here, you can see the market was actually moving impulsively to the upside, then it started moving, giving us a corrective impulse. And this is kind of an corrective or impulsive correction, you see. And we know that once you start noticing this kind of movement in the market, there's a chance that the market is about to change its direction. There's a chance that the market is going to change its direction. So you can see after the market created all this stuff, then the next thing we can just do is to draw a trend line to form a structure, form a pattern, and from this pattern we can see what we have here is actually how do we call this pattern? This is an ascending wedge. This is an ascending wedge. So now, like in my last video, I think my last video or the about 3 videos away from this one you're watching, I mentioned that whenever you wait for a breakout structure, a breakout, once you wait for a breakout, it is advisable to ensure that the breakout actually goes below the previous low that the market created. If the breakout can go below the previous low that the market had created, then comes back to retest a key level, then there's a very high chance that if you enter the trade at that point, you will successfully make some profit. Because like now you can see this was the low, this is a high, this is a higher low, this is a higher high, this is a higher low here, and this is a higher high, this is a higher low, and this is a higher high. As you can see, what the market did was to come down and go below this particular low. On going below this particular low, it came back to retest this particular level. This is actually a key level on the 15 minutes time frame. Why is this a key level? You can see market sold from this point and also bought from this point. So it came back and sold from where it had been selling previously. So with this particular candlestick pattern that we have here, this is a strong confirmation that the market was going to sell. You see this. If you are seeing this on this level, personally, maybe I would have entered the market if I had seen this particular candle, this indecision candlestick. But it is always advised, when you see an indecision candlestick, you are supposed to wait for the next candlestick to form to confirm, because it is an indecision candlestick. It doesn't know if it's supposed to go up or down. So at this point, you don't just enter the market after this one. So I wouldn't have entered for this one. Then I also wouldn't have entered for this one, because they are almost the same. You understand? So now, but this is the actual candlestick that would have made me to enter the trade at this point, and this would have been a sniper entry. Then you can see the massive sales to the downside. Or let's say I was not able to enter the market at this point. This is a bearish engulfing candlestick pattern, and it's coming from a strong level, a key level in the market on this particular time frame. Then if I can enter my trade at this point, then my stop loss should be here above this point. Why would I want to put my stop loss there? Because there's a chance the market can still go back up. Like what it did, you can see immediately after this bearish candlestick, the market did not just sell immediately. It bought to the upside a little, then came down and continued selling to the downside. You can see. So my stop loss has to be up here, because it might actually want to come and retest this particular zone. It happens most times before the market goes your way, So, but with this particular setup, guys, you can make some good money. Why I'm actually deciding to do this particular video, to illustrate this strategy on this particular pair, volatility indices, is because it is very easy to flip an account trading volatility pairs than trading boom and crash. It is very, very easy to flip an account if you actually understand your strategy. The reason being the fact that it requires very low margin. Now, the minimum lot size that is required on Volatility 50 index is 4.0. And if you enter a trade with a lot size of 4.0, you discover that the margin is not going to be up to $1. It's about how many cents? I think it's about 50 cents or so. I can't recall, but it's too small, far less than a dollar. You understand? So now, even if someone has an account size of $10, or let's say $10, there's a very high chance that if you can enter this market at the sniper entry, you can open 3 positions. And hold it. Like Let's say I enter the market at this at the sniper entry here on the close of the bullish pin bar. Then let's say I enter, where is my take profit? Then I decide to take my first take profit at this point where we have a previous low. You know, this is about 8.74. If I had opened two positions, that would give me about 16 US dollars. Then if I was able to hold the trade up to this level, this is about $15 per position. If I have two positions, I'll get $30. So if you have an account, so let's say maybe $50, then open like 10 positions. Once you are sure of your entry, open 10 positions. There's a very high chance of making good money within a very short time than trading boom and crash. You understand? The only sweetest thing about good thing about boom and crash is that if you are trading spikes, one spike can give you some massive profit. But the only thing that you won't like about boom and crash is the fact that it requires a larger it requires a large margin. You understand? You can't trade boom and crash with a very small amount. you know and if you use like let's say you want to trade crash 300. Crash 300, the minimum lot size is about $15. So yes, 15. And that 15, yes, sorry, 0.5 is the minimum lot size and requires a margin of about 15. So if you have a $10 account, you can't trade crash 500, crash 300. Then for crash 200, it requires about crash 500 requires about 2 point something, about close to $3 to trade your to trade with the minimum lot size on crash 500. So when you look at those minimum lot sizes and the margins they require, you notice that volatility pairs are the best to go if you actually want to flip an account. If you want to flip account, so this will be possible if you understand a strategy as simple as this. This strategy is too simple. What is it? It's just to wait for a breakout and a proper retest. Just wait for a breakout like what happened here. Just most times you want to find out where the market is going to, like what the market is doing. You get confused. Guys, don't stress yourself. Don't stress. Just allow. If the market is going in one direction and you are not sure of when to join that trend, don't even stress yourself. All you need to do is just to follow it up, draw trend lines to follow it as it goes. Continue drawing your trend line to ensure you monitor that the market is still going in that direction. While you doing so, you are actually waiting to see a breakout of that trend line. So as you're monitoring, you are seeing the kind of structure or the chart pattern the market is forming. Once it gives you a chart pattern that indicates a reversal in the market, guys, all you need to do is just wait for a breakout. And when there is a breakout, I still advise you wait to see a proper retest. The breakout has to go below the previous low. Then on going below a previous low, like what happened here, the next thing is for the market to come back to retest a key level, because usually once there is a breakout, there is always a retest. But there are times you would see market breaks and keeps going to a very far distance. Most times it takes days for market to retest a particular zone. You understand? Most times just 5 minutes, most times 1 hour. So it depends. Don't think it will not retest. It will retest maybe later in the future. You understand? But to avoid chances of losing money, it is advisable to always wait for a retest. If you see that the retest is not happening and you feel the need to discipline yourself, because this business requires discipline, I will advise you stay away from the trade. Leave it, let it just go. Wait for the one that will break out and retest properly so that you can enter trade with confidence, guys. See, let me tell you one thing you need to understand. When I started trading, I was always looking for indicators, YouTube videos that the traders will be explaining how to use some indicators to trade. So each time I see the videos, I will just practice direct. When I just do a few trades on my demo account and it works, I use it on my real account. Then I used to trade with full confidence. I mean, like, I'll open multiple positions. Yeah, I wouldn't even care to look at my account size because I did not know all this price action stuff. I don't know all this price action or any kind of trading concept like smart money or whatever, ICT. I never knew any of those things. I was just depending on those indicators. So once I see them, I entered these trades with full confidence. Like I used to trade full margin most times, and it used to give me massive profit. With that small account I used to have, like maybe I can have like $30 account, I'll ensure that I open maybe lot size of 2.0 or 0.2 and make sure it takes through the whole of my interruption here. A call came in, so I'm not sure, I can recall where I stopped, But what I'm actually saying in essence is that I depended on those strategies I saw on YouTube, with the indicators, and I used to trade with full margin. You understand? So I wasn't scared. I was trading with full confidence that it was going to work, And I can tell you the truth. There are days I used to make some good money. I used to make up to $200 in one day. I used to make up to $100 a day. Then at some point when I started trying to learn price action and all these other concepts, too much information that came into my head started bringing confusion, that most times those same trade I used to see and enter to trade with indicators, I would be scared. Although I used to have my losses then with those indicators at some point. Sometimes I used to have some losses. Sometimes I will be profitable. But there's no how I would make a deposit that I will not withdraw profitably. I'll still withdraw profitably, though I'll still lose. But I was looking for a way I can trade without using indicators. Since I was only depending on it, I knew nothing about marking out good key levels, marking out good resistance, all those trend lines, in the market. So what I'm trying to say in essence is this: if you can study a strategy and you understand it, when you want to trade it with full confidence. Don't trade with fear, because it was fear that made me to start losing money and opportunities. You understand? Those things I used to do, those trades I used to take, once the indicator will tell me, I'll enter full margin and make some good money. At some point I couldn't enter those trades. I started having fears. This trade might not go here, might not go well, or this is a resistance, and this is a support zone, this is a key level, this is this, because I came to know those things. So when I did not know those things, I used to trade freely. So sometimes information can really affect you, can even change. So guy, I am trying to make you understand that all those things, those kind of fears that make you try to lose opportunities, lose some trades, is because of the information that you have. You have too much information on your head. Try to filter, select them, and stick to a particular one. And when you stick to it, when you want to trade with full confidence. The only way you can be successful in trading is by trading with confidence, so that once you have an opportunity that can give you good profit, you go in full margin. You go in with full, even if you want to go full margin, or enter some good lot size and make some reasonable amount of money out of the market. Because there are times you will see opportunities and you will be scared. I'm not sure it will go well, and unfortunately later you see the market will go well. And there are ones you see, yeah, let me just try, this one might go well. The next thing is you enter the trade and it ends up in losses. Because you are not confident, guys. So build some confidence, enter trade, study this kind of setups, study this particular setup I'm just showing you here. Study these setups. What is the setup? You want to see market moving in a certain direction, then giving you an indication is going to change direction, like this kind of structure, this kind of movement here. This is an impulsive correction. So once the market, you draw your trend lines and want to wait for a breakout. Once there is a breakout, as we have here, you want to see the breakout go below the previous low. You want to see the market come back to retest the previous key level, an area where the market has sold previously, and this is actually a key level on the 15 minutes time frame, like what you have here. This is massive money to the downside, guys. You see massive money you can make. So even if you have a small account size, let's say $20 or $30 account, with this setup alone, you can use it to make up to $70 or $80 if you can go in with full, maybe even if not full margin, you go into like you open many positions, and even if you enter the market, let's say you enter at this point, then you can hold the market up to this particular level here. This is about $9. Open 10 positions or $8 is about $88 or almost $90 in profit, guys. So do this, guys, and practice it. Just practice it. See, dedicate, even if it is 2 days, to study only this particular strategy. I bet you'll be profitable. Just dedicate, even if it's just 2 days or 3 days, to study these things. I bet you will start seeing good results, guys. All right, so click on the subscription button if you're not subscribed to this channel yet. Like this video, Share your thoughts in the comment section. And if you want to enroll in my one-on-one mentorship training, not free, sorry, then you have to contact me. There's a link in the description of this video that will take you to my Telegram channel, where I post free information and stuff about my events and about my mentorship trainings. You will see my direct contacts there. You click the contact me so that we negotiate on how I can assist you to be successful in trading forex and any tradable pair, guys. So please keep on sticking to this channel, and let's grow, guys. Till my next video, peace out.